All right, happy Friday. Let's see here on the week, the S&P 500 down 2.48%, the Qs down 4.6%, the financials XLF was down 2.29%. TLT was actually up this week, up about a little over 1%, and the IWM was down 2.4%. Raise your hand if you have taken a stop loss this week or two, or even today alone. We are going to get into all this today. All right, this is Patrick, and you are trading with Prime. What you're looking at on the screen right now is a monthly chart dating back till 1994. And so what you see, this line on the screen, is a trend line coming off the bottom of 1994, and you can see it chops through 2002, or the bottom of the dot-com bubble. It goes up and cuts right through the financial crisis, and then heads on up here. And as you can see, we're just bouncing up against it. It is possible at this point, and I don't, we're a ways away from there, but it is possible to consider there could be higher prices and maybe we get above this trend line. It is in the realm of possibilities, though I don't think it's actually going to happen anytime soon, but you never know. I'm going to get rid of this line on the screen here, and we're going to go down to a lower time frame. I'm going to go to a weekly chart. Before I forget, let me hop over to this. Let me hop over here. So right now, this is the schedule for next week, and just something to kind of look at and keep an eye on. We do have some numbers coming out. And I don't know how well, or maybe the market will or won't react to these numbers, but we do have import price index. We also have real median household income. I'm gonna scroll down here. What might be interesting to see is the retail sales. How much money are people really spending? And then, of course, let me go down here. Home builders index. That might be kind of interesting too. Something to kind of look at is we do have the Fed Reserve meeting announcement. That's at 2 p.m. on Wednesday, and then at 2:30 p.m. we have, the Fed Reserve, the chair Jerome Powell, is the press conference. So depending on what is said or what isn't said, the market may react to that. And at this point, it's possible that we just kind of trade sideways up until Wednesday. I'm not saying it will happen. That's something to consider. But of course, nothing would surprise me in this market if we do continue selling off, or if we do rally all the way up into the Fed meeting. Who knows? We just have to be aware of these things and certain things that can impact the market. We'll also, of course, have Thursday jobless claims. And then Philly Fed Manufacturing Index. That will be an interesting one too. So we'll see coming into next week. We'll kind of take a look at these. Last time we talked, we were looking at this put to call ratio, and we were saying like it was getting really low. It was getting pretty low, and I think this was last week. September 2nd. Actually August 27th in there, it was getting extremely low, 0.38, which means 38 puts for every 100 calls. And then over here on September 2nd, you had 40 puts for every 100 calls. And we were talking about the possibility of a correction or a pullback. And of course, since then, it has happened. And I'm not saying this chart is what gave us the indication, but oftentimes, option traders are wrong in their trades or their, hedging positions, mainly investment banks and hedge funds. So something to really look at is when we get pretty low down here, what it means is there are so many people that are bullish the market that there are too many people loaded to one side of the boat. And so of course we then saw a correction. And so it played out this time. Actually, it played out back here on June. We could go back and look at the charts, but often this will play out. The problem with the trading this is that you don't know when it will play out, because it can go on for quite a while. But of course, now we're up to 0.54. We're getting closer to the mean. And I would have to say that between this level and 0.75 is probably closer to the mean. Okay, now let's go back to the charts. Let me get off of that. This is the weekly chart we're looking at here. As far as where we're at in the week, and I went ahead and hopefully you guys can see the figures over here. I changed some settings around, so hopefully that will actually show up on your cell phones, because I know you guys are all watching videos on your way home from work. So here's the thing is, like, we closed below last week's low. So now the reversal, last week's reversal candle is confirmed. We are now, I wouldn't say that we're in a downtrend for the bigger picture because, of course, this is an uptrend, higher highs and higher lows, but we've closed the week down below. I would have to say, I don't remember what I said last time. Maybe I said 320 price level. I'm still eyeballing that price level. And as you can see, this moving average, which is the 20-week moving average, it's starting to curl a little bit. By the time we get down here, we'll probably be touching this moving average, and that would be a good buy. But just remember this for your intraday trading, and you know, it is possible that we retrace back up to this high of the reversal candle, or even halfway. That is absolutely 100% possible before then rolling over. In fact, I would say that that is probable at some point to go test the highs again, or even retrace a little bit up there. You'll have some keep in mind, you'll have some resistance right here at the high of this candle, which is 342.64. So maybe 342.50 would be a good level. Okay, let's get down to a lower time frame. And today I'm not going to go over all the charts again. I'll just go over a few of them. This is the hourly chart, and now that we're on this, I'm going to go ahead and take it off extended hours. And let me zoom in here. So you can see, and I went ahead and drew, let me go back to this picture here. I went ahead and put a trend line in at the lows down here, and I brought it all the way up to current price. And the reason why is because we have a gap down here. You know, I could zoom in and show you this gap, but there's a gap right here. And then we tagged this line right here. And then today we tagged it right here. So we now have 3 tags. So for the bulls, that is absolutely possible to be a low or a bottom. So if you did buy today's low, which, you know, let's be real here, it's a Friday. Who would want, you know, I wouldn't personally want to take this trade, but you know, if you did, congrats on the trade and well done on spotting that trend line. Another thing for the bulls, I'm going to go ahead and zoom in some more, is we did notice this wedge pattern today. Let's do that. We did notice this wedge pattern today, and you know, again, price came down into it, and then we've just kind of been consolidating here. Today's, you know, the last few, I want to say the last couple days at any point, I believe that we were going to just fall through down to the abyss, but that's not really what has happened. The bulls have really been stepping up to the plate and keeping this thing going, you know, which brings me to another question that I might have for the market is, you know, we saw the same kind of scenario, and I'm going to do this. Of course, buyers started showing up in this price area right here. And as you can see, volume pick up, like volume really picked up in this area to match up with this low. And then volume picked up right here in this area, and it matched up with a low. In fact, it stayed in a range going down a little bit while it consolidated, and then the market just rallied it and took off. The question I've kind of had was, this to me looks like selling volume, right? But it is possible, let me clear the screen. This selling volume, or what I believe is selling these last few days, could really just be a bottoming kind of formation, just basing that on this volume over here. It turned out to be a bottom. It turned out to be institutions or whoever stepping up to the plate. And then finally, I'm going to draw on one more thing for the bulls, is we really just came back down to the old all-time highs, which were around these price levels of 330, 334. Well, the old all-time high was up here at like 340. But it is kind of a zone. So that's several things for the bulls to lean in on if they want to, you know, if they want to buy this market. To me, it's a little too scary. I'm not personally comfortable buying it. We're in a shorter time frame downtrend. So for me, it's better to short the rallies or let off some of the longer term. I don't want to say the long-term account, but longer position trading kind of things, or, you know, we've been riding this rally from the March low. So longer term, as far as the last 6 months, I'm kind of letting off some of those shares. Let's zoom back in here and really dive down into this lower time frame, because this is kind of what people are after as far as your short swing trades. You know, I don't know. Looking at this pattern though, what I would like to see this turn around, I'm not saying that we have to break out of the falling wedge kind of a pattern. I'm just saying, like, it would be nice to start to see maybe a higher low, and then buyers can possibly step in here. Yeah, if we want to be conservative, we could actually wait for the breakout, maybe a back test in that kind of scenario, and wait to break these all-time highs. As you can see, if that happens, there's still a lot of room to run up here. You know, in fact, if we measured this, if this was our, oh, come on. If this was the pattern right here, and let's say we broke out of this and we back tested and flew, we could measure this, right? And we could at least say, maybe it'll hit up to the top of this candle, and I'm going to put a line on the screen. Maybe this would be a good target around 350, which would be about three quarters of the way back up compared to the first fall. And then, of course, you'll have resistance up here. But we really have to take one day at a time. It's one of the scenarios that we are below all 3 moving averages on the hourly time frame. This isn't a downtrend. And like I was saying in the last video, the easiest way to play downtrends, in my opinion, is wait for the rally and then to short, wait for the rally and then to short. You know, this last day we've had in the last day and a half has been a little bit choppy, and I've even been whipped out of some of the trades in this area. But overall, it's easier in shorter time frame downtrends to short things, keeping in mind that you have to know what price level you're going to be stopped out of the trade. Okay, let's go over to something else here. Let's go to the Qs, since I know a lot of people like to trade these NASDAQ. We saw a lot more sell-off in the Qs than we did anything else. And the reason why is because the Qs were up 81% since the March lows. We're talking three months. It took the Qs. Let's do this. Let me do something here. I'm going to go to the yearly chart here. Actually, I want to take a look here and just go to 5 years day. So all of 2000, so you have 2017 into 18. It took a year for the Qs. The Qs ran all the way into the end of 2019. It was up 48%. So think about that for a minute. Is like, well, and we could even do this. The Qs, a little over a year, went 63%, right? It took a little over a year to do that. And we've done, 82% in a couple months, in a few months, 5 months. That's something to really consider, like how overextended the Qs were. In fact, we could even go to a 10-year chart, and you can see how much it has ran in the last 10 years, and it did that in a matter of months. So it was probably a little bit to be expected that the Qs were going to pull back. I could even throw some Fibonacci's numbers on here and see maybe a good price level. And I'm not saying it's like the S&P 500, where if I just drew a line across the screen, this is the old highs. We already ran up and then broke out, back tested, pull back again, and then we just run up again. So I'm not saying we're necessarily going to come all the way back down here. I had an error in the last video as far as a price level I think I said 241 or something like that. I've actually changed that. So if you want, go back and look at that video in the comment section. I have updated the price of where I believe that it's, most probable. Let's go down to let's get off of this. Let's go to an hourly chart again. Let me zoom in. So same kind of thing with the Qs. As far as what do we see on the screen as far as some sort of pattern developing, like maybe there's a pattern in here, possible. And again, it's shorter time frame. We're below all 3 moving averages. So for me to be a buyer, I would want to, at least on the hourly time frame, I would want to see the prices get back above the moving averages. So maybe we trade sideways for another week. It's possible. If you want to go ahead and take trades, I would just be really cautious taking long trades or trying to time the bounces on these, in a shorter time frame downtrend. It's kind of hard to do. Like it feels like the market is crashing when you were taking that trade. And at what price are we going to be stopped out of the trade if we're wrong? Because as you see, we're in a downtrend, and each day that passes, we keep taking out the prior low. So, and that would normally be the stop loss is the prior low. So I don't know. That's something to really consider as far as what you wanted to do with, with trading that. Let's look at the IWM, and then I think we're going to wrap it up for the day. So the IWM, we were talking about this on the last video about, we had a couple trend lines in here. I said we've already back tested and we're breaking down. And so maybe double top, it's selling off again. I do notice a lot more weakness in the IWM compared to the other charts. let's do this. Let me zoom in like this. So it's really anyone's guess what's going to happen, but again, we're in a shorter term time frame downtrend. So there are possible levels that this thing is going to go to, and what's on the screen is one of them, which is around, I don't know, say 145.20, 145.50 in that price area. We are coming into support right now though, and just a little bit of technical analysis for you guys. Because we've had a little bit of consolidation back in this area back here, it would take, at this point, because of how sold off we are, it would take a black swan, in my opinion, it would take either a black swan event or a some really bad news for this thing just to shoot right through. So if you did want to take a long trade, we're getting pretty close to that. In my opinion, we're getting pretty close to that area. Plus, we've already pulled back, 6.5%. Actually, if I wanted to do it from the highs over here, we've pulled back 7.5%. So we're coming into that price area. It's anyone's guess as far as where that's going to be. I like to personally wait for higher highs and higher lows, especially something that's coming off of some relative weakness. And now TLT, and then we're going to wrap it up here. So we did take a trade off this price level, posted it in the Discord. And by the way, if you guys want I put the link to our website and the Discord. It is in the description underneath the video if you guys want to be a part of that. We do have alerts, so feel free to check it out. And again, before I forget, this Sunday, 5 p.m. Pacific Standard Time, we go over charts and any technical analysis to help out some traders. So TLT, we took a trade off of today. I think it was yesterday. We took a trade in TLT. If I zoom in here, and it's kind of one of these things where we've been consolidating. We broke down, then we ran back up, and there's, we're in a zone here. So in my opinion, I want to see some more action on what happens next week. We do have a little bit of maybe some intermediate time frame patterns developing here, but to me, this price action from yesterday into today, and then we've kind of consolidated all day, to me, it's more bullish than bearish. However, we have seen times when it'll look like a bullish day, and then then price gaps down below the next day. So it's really one of these things we just kind of have to keep an eye on. Okay, so I think that pretty much wraps it up. Again, we're here Sunday, 5 p.m. Pacific Standard Time. If you guys have gained value out of this video, be sure and hit the like button, hit the subscribe, bell notification. That way when we do go live, you won't miss it when we go live. Thanks, guys.